Good morning, ladies and gentlemen. You're with Martin Panev, Chief Account Executive and Trading Analyst, GDMFX. Welcome to today's European session market outlook. Starting with some general information, basically most of the major markets started to show a bit of a correction from this week's global massive downfall sell-off. The Dow 460 points and the NASDAQ did 140 up. The commodity traded S&P 500 recovered 50 points from the weekly decline of over 200 points. In the European area, the German DAX did 450 points range but closed near the opening, and the French CAC40 showed near 200 points range but ended near the opening price as well. In Japan, the Nikkei 225 has regained a bit. However, overall, the Asian markets are still struggling. And we might wait a bit longer to start seeing some recovery there. Basically, we are going to wait and see if today's markets are going to show a continuation of the uptrend which tried yesterday. North American markets, S&P Case-Shiller Home Price Index year-on-year 0.1% worse than expected yesterday. Market Services PMI 0.8 worse than expected. And the composite 0.7 lower than the previous reading. New home sales change month-on-month reading, the 0.6% worse than expected, and consumer confidence showed better than the expectations, 8.2 points, the highest level since January and the second highest level since the end of the recession. The new home sales month-on-month was 0.013 worse than expected. The dollar performed well yesterday, but rapidly trimmed its gains as the U.S. stocks abruptly turned lower in the last hour of trading. Today, we're waiting for the durable goods orders. Both reports are scheduled. MBA mortgage applications. The second, which is Tier 2, in the agenda, durable goods orders excluding transportation. Tomorrow, GDP data for the U.S., personal consumption expenditures, and also there's going to be a symposium, the Jackson Hole Symposium, which is a forum for central bankers, policy experts, and academics to come together to focus on various economic topics. It's a 3-day forum. It starts tomorrow. Moving along to the European markets. Yesterday from Germany, we had a German IFO business climate and assessment and expectations readings, all better than the anticipated and the previous and above the 100 mark. The assessment 114. The Swiss unemployment level 4.24 million. Tier 2, Swiss UBS consumption indicator, a leading indicator of private consumption trends, which is the most important component of the gross domestic product reading for Switzerland. Moving along to the Asian Pacific markets, corporate service prices year-on-year for July, 0.2% better than the expectations and 0.2% better than the previous, now at 0.6%. Stocks snapped at 8-day losing streak and yen decline after China cut interest rates for the 5th time since November. The People's Bank of China on Tuesday announced cuts to benchmark interest rates, lowering its benchmark lending and deposit rates by 0.25% percentage points. The rate cuts are effective on a Wednesday and aimed a reducing corporate borrowing costs. This is what the bank said. China's central bank also reduced its reserve requirement ratio by 0.5 percentage point, with that requirement effected on September the 6th. The reserve cuts are meant to ensure enough liquidity and stable credit growth. This is, again, a statement from the bank. China's corporate bonds are set to gain after the central bank eased the monetary policy following the worst 4-day stock rout since 1996. This is what local brokerages and analysts are quoting. Borrowing costs onshore are set to decline as the effect of cheaper bank loans spreads, while a shift to more onshore financing stands to a cut yields on Chinese firms, international notes as well, by reducing supply. It is also deepened concern that the slowdown in the world's biggest consumer of raw materials might be worse than previously thought, which would be more bad news from Southeast Asian economies that depend on the commodity exports. Very, very important for the Pacific and especially Australia. Going down to the New Zealand, the New Zealand imports are up, exports up as well, and the trade balance month on month is up by almost 50 million from 600 million. Moving to the commodity sector, basically we are expecting big movements there today. We would advise our clients to stay alerted. The markets are very, very volatile, and people are most probably going to turn back to commodity trading as the currencies are a little bit unstable. This is for the long run traders. Thank you very much for your attention. I wish you a successful trading day. Cheers.